So there's a lot of UK stocks struggling out there at the moment. Businesses are starting to calculate the cost of the impact from the budget from Rachel Reeves, and the term of actions have consequences are certainly starting to be felt now in the UK economy. Today we're going to talk about the impact that Labour have caused now from their horrible budget for businesses, and also the hyperinflation that they could potentially cause next year. Let's get started. So last week was a horrible week in the UK stock market for UK businesses. Everybody was starting to calculate the impact from the UK budget, and the UK budget fallout has continued to get worse. The initial reaction from the budget was actually it wasn't as bad as what we feared, but then as soon as every business started calculating the impact from the NI cost and the increase of the national wage, it has started to hurt businesses massively as they start realising how much it's going to cost them and how much they're going to have to start increasing the prices to cover the cost of the increase. An example for that was Greggs. On the Friday, analysts and broker estimates started coming out, and they've been coming out quite slowly to be fair, on the updated cost of the budget, and that meant Greggs had a 6% down day on the Friday. And as you can see here, analysts were predicting nearly 100 million budget impact from these new increases in NI and the living wage. Any business that has high employee concentrations are going to get whacked. We saw the same from Sainsbury's and M&S. They came out and saying that the budget is going to be pushing prices up. We said that Sainsbury's said that they were going to see around about 140 million in cost, which does not include the increases from the minimum wage that they're going to have on top. Tesco's faces nearly 1 billion national insurance hike from price rises. We saw Wetherspoons came out and said that the price of the pints are going to go up, not down, and that was one of the big things that got the biggest cheer during the budget, was that the price of pints would come down. And Wetherspoons came out and said, nope, not after this budget, they're going up, and that's going to cost them nearly 60 million in costs. Now, obviously, the big impact is this NI increase. The big thing is that NI contributions have gone up, but it's not just the fact that NI contributions have gone up. I think everybody kind of looked at that in the first place and went, okay, it's not going up by that much. It's the fact that the threshold for what you have to start contributing to NI was the big impact as well. So we're seeing that at the moment, employers will have to pay nearly an additional £770 for each minimum wage worker. That's a mega impact. If you start talking about these businesses that are employing 1,000, 5,000, 10,000 people, the lifeblood of the economy, these businesses that employ so many people, are just going to get absolutely whacked. And quite often, all these companies that employ a lot of people are quite thin margin companies. This is why they have to increase prices. Companies like Tesco's, like Sainsbury's, have margin thin businesses where you're running on 1-2% profit margins, so they cannot soak up these costs. They have to pass them on to the consumer, and the knock-on effect from that is, are we going to start having job losses? We cannot take, a lot of these businesses cannot take a lot of these costs on. Is it going to lead to the point of view where people are getting less hours at work, and also we're seeing less people taking on for work? That is the big impact that we're going to see with these big hikes here. And the other impact that we have as well is the double whack of national insurance increase. Businesses aren't only having to right now calculate this impact from the NI cost, they're having to then calculate the impact from the national minimum wage. How they went for the big impact of the NI and then increased the national wage on all these businesses is insanity. They put the national minimum wage up by 6.7%. This is currently over 3 times the current inflation rate. Whoever got these numbers and thought that is acceptable, we did a big whack last year, we put corporation tax, and now we're going to sting a lot of these businesses with big hikes in the NI. Oh, and by the way, we're going to increase national wage by 3 times inflation. This is just suicidal for a lot of these businesses, and we're going to see so many of these businesses struggle and get hit by this, and it would not surprise me to see a lot of these businesses have a very tough 2025. And in fact, from what we've seen, there's a lot of broker downgrades starting to happen with these businesses. As I say, these are big impacts. It's going to hurt the profitability. And if they put these prices up, how strong are these brands to survive it? It's okay putting prices up, but the problem is, if you put prices up, are people going to go out and buy less? Are they going to spend less? And that will hurt the revenue. Have they got the pricing power? This is where the companies that are going to do the best in this situation are companies with pricing power. If the companies don't have pricing power, they are going to really struggle during these next couple of 12 months, because it's just going to be big impacts onto their profitability that they won't be able to take in. But all the businesses that do increase the prices, a lot of these companies are going to have to increase the prices by 3-4% to try and cover the cost. The big problem that you have now is that interest rates. We've already had the Bank of England come out and say that we might not be able to cut interest rates, and they've not directly said it because of this, but because of the budget, that's going to cause inflation, because all these businesses now are going to be putting up in their prices, we're going to start seeing inflation come back, because these companies are going to be putting their price up by 3-4% to try and adapt to the NI situation, and that's going to cause inflation. And what you're going to have here is a double whammy where interest rates are going to remain high. That's going to be hurting people's household income. You're also going to have people less well off because they're going to have to go and buy things for more money. You're going to have businesses worse off because they might not have the pricing power to help with the situation. It's all an ugly situation, and we're starting to have the impact massively. Now, the other big impact that we have at the moment, and what Labour have failed on for a lot of people out there, is their plan to freeze energy price caps. One of the big causes of inflation is the energy price cap or energy prices. Now, what Labour said they were going to do, and probably one of the best things that was going to happen if Labour got in, is they were going to freeze energy prices. However, as we've seen from earlier in October, prices are going back up, and gas and electricity prices have gone up by 10%. So even this element isn't helping the consumer, and it's not helping inflation because we have energy prices going back up. And when it gets to around about April time and all these factors come in of the NI impacts, the national minimum wage impacts start coming in, and then that's when businesses have to start increasing the prices, it's going to be very, very ugly out there for the consumer and for UK businesses. It looks a very ugly 12 months when all these impacts start kicking in. And there's going to be a lot of people struggling out there, and there's going to be a lot of businesses struggling out there. And it does make me a bit nervous where the UK economy is going at right now. 12 months ago, I was a little bit more optimistic where the UK economy was going. Right now, I'm a little bit worried, and I think we're starting to see that. We're starting to see money cycle out of the UK stocks. We're seeing a lot of UK stocks struggling at the moment, and a lot of people are starting to price in this impact and thinking, if they hike up these prices, are they going to be able to still get that demand? Are they still going to get the sales with those higher prices? Or is it going to be tough on their volume of sales? And also, are these price hikes, this inflation going to come back when these companies are increasing these prices by 3-4%? And also the consumer. How's the consumer going to go with this? Because if the consumer is losing their jobs because of the slowing economy, if the consumer is struggling to go and buy things because things are increasing in prices, it could be a really tough situation out there in the UK in the next few months, and it is making me a little bit nervous. It's making me a little bit nervous where I'm personally assessing all the investments that I have, and if I have any investments in any high amount of employees at a certain company, and looking at the impact of what potentially that could have for them. And I'm also looking at it from a point of view of making sure that I'm not just allocating into UK stocks because they are cheap. They are cheap because there's certainly risk and impacts that could potentially come. And it comes at a frustrating point because we look at the point of that we were in a good place where we had inflation at 1.7%. And now with all these increases in prices, with the interest rate staying high, this inflation certainly doesn't look like it's going to be staying at 1.7% for long. I would expect inflation potentially by next year reaching 3-4%. And if we get to the point where the hyperinflation starts coming back in the UK, where are we going to go back with the interest rates? We're certainly not going to go downwards. We certainly could potentially go upwards, and once again that just makes it an even tougher situation for the UK economy, because right now we should have interest rates coming down, but at the moment we're on hold because of this potential increase in prices in many UK companies. Certainly for me, this is the point of view why UK stocks are and UK businesses are not just as valued as much, because you look at all these issues that are currently going on at the moment. Why would you take the risk in this market? Why would you go take the risk and go buy these UK stocks with these pressures overhanging? I mean, you can go for the bargain picking if you want and try pick some of the gems out there, but this is certainly for me why I look at quite often to invest in the US. The US is where I put 75% of my wealth, and the reason why is because of all these examples of people that we have running these. They just make disastrous decisions for the UK market. I don't know who has thought this through with this triple national. I don't mind lower paid workers getting nice pay increases. I'm a big fan of that. But realistically, can business afford this right now? And when you slap them also with an NI increase and you start looking at how much this is going to cost them, has anyone even from the UK Labour government even priced this out? Have they actually gone to a normal business and that employs a lot of people and go, how much will this actually cost them? And when they run those numbers, have they actually looked at how sustainable that is? Have they actually looked at, hold on, none of these companies can actually afford this without increasing the prices? And when we just come off another inflationary impact from 2022, the last thing we need is another inflationary environment. And certainly all this is going to do is increase inflation in the UK market. I don't think it will, but hopefully the UK government will realise some of the impact that they've caused here for some of these UK businesses. But it's going to be a really tough time at the moment, guys. And what we're going to see over the coming few weeks is more and more brokers and companies in the trading update saying, look, we've run the numbers here, guys, and it's going to be really tough for us. We've got to increase the prices. And the only businesses that are going to survive here are going to be those businesses that have pricing power. Those companies that can put those prices up by 3-4% and survive and still have the demand, those are the companies that are going to be okay. But there's going to be a lot of companies that are not going to be able to do that, guys. And that's the thing you've got to be careful of right now, especially when you're investing in any of these businesses. So I hope you enjoyed the video, guys. See you in a bit.